as the demand goes up, that silver price is going to greatly outperform the gold price, even though I think gold's going to do quite well here over the next 7-8 years. I think silver is really going to perform well. And, right now at $26, we're only at half or just over half of what the last high was of the last cycle. And you've had gold trading, already above that last high.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And good news, because we have a first-time guest to the show, although that's my fault. I was a little slow on getting what I am happy to call one of the finer minds in the silver industry on the show, which is Steve Cope of Silver Vipers. Steve, how are you today?
I'm fine, Chris. Thanks for having me. Yeah, we've crossed paths and we did a little bit at your last conference, but excited to be on the show now.
Yeah, and speaking of the last conference, a lot of you guys met Steve because you were teaching class in that, I guess it was the Arcadia Silver Lounge, but I mean, we had a bunch of quite advanced, significant investors who were sitting there, and it was like mining stock education, which I really appreciate because, and what I try and bring to the show is that, yes, everyone has a business and things that they're doing, but like to have at least some education so people are always getting some benefit. And I know a lot of people really appreciated that. And Steve, it's funny, before we dig into silver, I might just mention, I finally got my masterclass pass yesterday. So I'm logged in here, and I've for years been planning to set something up like this. So hopefully one day in the near future, you can come by and maybe record a mining investor masterclass, because it's something that, a lot of us get into silver. The macro is easier. It's more user-friendly to understand. But a lot of the things with the mining stock world, as you well know, get pretty complex. And perhaps I'll let you take it from there if you have any thoughts on that.
Well, no, I said that was fun hopping into that room, in the Arcadia room. And I was just kind of listening and then chimed in and I guess identified myself as a CEO of the space. And yeah, it went from there. And it was a lot of fun, and I enjoyed chatting with everyone. I know we had a lot of people listening in, and there was only the 10 of us in the room, with the video. But yeah, it was a blast, and I would love to do that again. And yeah, if a masterclass thing works, and there's so much that you see people, and it's a space that people have been burned on a lot over the history, and it kills people like our group that we value and like to do things the right way. And we see a lot of people not doing it the right way, but the amount of shareholder value that's lost to people that come in and get really excited because they, silver and gold is very exciting. There's lots of money to be made there, but then they get in bed and they invest with the wrong people. And you go to a conference in person, and every story, every company at the conference, it sounds like the greatest gold and silver story that's ever been told. And then you come out and these people are overwhelmed. They've just met with, up to 100 different booths, and they don't know where to go from there. And 90% of them are probably, not great people that, really don't have their best intentions in mind. So there are keys, just in the short form. To me, the keys are focus on management first. If a management has a track record of success, that's great. At least it shows that they've done it before. The odds are they'll do it again. You look at the management ownership, make sure management's, aligned with shareholders and invested and, wants to succeed the same way shareholders do. When you see a low management share count, they're either in it just for the salary and they've blown out their shares or all the other nasty things that can go on. But, in our case, I think in all three of our public companies, management owns over 20% of the stock. We're very aggressive in buying in the market. It's not like, and that's the other one, I guess, is sometimes management can give themselves all their shares right up front before, at like a zero cost, and then never buys again. But you can see us active in the market and buying and supporting the various companies. But management first and foremost is always the most important, and then the asset is the next obviously most important thing. You want to have something that's got potential to find gold and silver, but a bad management team can screw up a good asset any day and make it worth nothing. Where a good management team, even if we're onto the right asset now, we're going to do everything we can to preserve shareholder value and find the right asset and ultimately have a win down the road.
Well, I appreciate you mentioned that, because as I got into the mining stock world, and it's exactly what you expressed, where I'd go to these conferences, I talk to 20 companies, and it's like, how do you tell one from the other? Especially, okay, if you have a proven deposit, that gives you a little bit more information. But when you're betting essentially on which groups of people are going out there to do it, again, that's what I love about the way things unfolded at Silverfest, where people get to hear. And as me, as a former option trader, I can listen to the way someone orders lunch and extrapolate, how do they present themselves? How do they speak? And you can just see how they handle things. So, maybe hopefully you get some insight outside of their lunch as well. But especially where a lot of the technicals are a little bit more difficult to understand, when you hear how people go about things, how they approach things, and when you're essentially betting on management, one of the things I imagine, and perhaps you can tell me, is that if you're an explorer, I would think there's also a big value in is the people running the company, if they realize where they're looking, there's nothing there, are they going to double down because they're like, oh, well, we're already in here? Are they able to say, hey, we did this, we understand we didn't find it, the stock's going to go down, but let's at least right the ship? What can you say about that?
Well, it's very important, and you see it time and time again. Guys fall in love with an asset. Geologists certainly fall in love with their asset, and they keep, if their model keeps changing and changing and changing, and they're drilling the same project, over and over again, sometimes, they've spent, millions and millions of dollars, and they finally hit something, and it's like, hey, whoa, we've got this great hole. But you look around it and say, that's great, but where does that leave you? You hit this, you finally got your one little hole, but you've drilled all around the entire thing and everything else is dead. Now you've got no size component and you finally got your hit, but all you've done is waste money. I mean, a good example in our group was in one of our companies was Oryx Minerals, which is another company in the Belcara group. And we had a project, great, results, put a couple holes into it, saw that there was a buried intrusion that had come out and wiped out the system at depth. We move on. You move on, you get off that asset, you get onto the next one. Silver Viper, we did the same thing. We had a listing asset that had, fantastic high grade samples that never been drilled before. We right up on listing, we started drilling. We did a small program. We got 2,500 meters of that program and saw that it didn't meet our model. It wasn't going to have the size that one of these big companies was interested in. We had sniffs. We saw some silver. We saw some gold. But we said it doesn't match our model, and that's when we moved on to the La Virginia project.
Yeah.
And if you can get away from it sooner and not spend, 10, 20, 30, however far down the rabbit hole you want to go drilling some of these things, you're going to have a lot better chance of success. And the big thing in the junior space is dilution. And if you're, wasting time and, spending all that money you've raised from shareholders on something that's never going to pan out to what you're looking for, and then you got to raise money at lower prices after that, and you end up diluting. And a lot of people, like selling companies, you see they focus on the market cap. Okay, I sold a company for 500 million, but if you've issued 500 million shares, by the time you do that, those early shareholders have been diluted down so much that they would have been better off selling at 100 million for half the cost. So
yep.
It's a constant weird balancing act that happens in our space, and you see it oftentimes as guys fall in love and wanting to sell their project for that big huge number, and they keep going, and that's kind of getting off topic from the getting away from projects, but it's just another pitfall that I see other CEOs fall into. I've got to sell, I want to sell my product, I want to sell for $1 billion, but if they'd sold it for 500 million 5 years earlier, and they could have, then shareholders at that time would have done a lot better. But like you say, it's a balancing act, and the timing has to be right on everything. But we're very cautious, and again, it's kind of our reputation as a group of the money should go into the ground where it belongs. We run a very tight marketing budget. We don't spend hundreds and hundreds of thousands of dollars or millions, as you see some companies spending, on frivolous marketing. We're very targeted with that money, but for us, we want to grow organically, and that comes from drilling. We're an exploration company. The money should go into the ground, and the bulk of it should go not into salaries, not into marketing. It goes into the drill and having real results.
Yeah, well, certainly a good thing to keep an eye on. And Steve, perhaps a good next question as we pull up the silver chart here, and courting on Tuesday afternoon here, right around $26. Obviously, you have a lot of mining experience. What led you to settle on focusing on silver at this point in your career?
I mean, I've always been precious metals, but I've had a love hate relationship with precious metals, but it's what I know. It's what I've grown up around and learned in this industry. You know, if you have base metals that come along with it, great. But as a group, we've always targeted precious metals. You know, moving from this point, moving forward, certainly what gets me excited is both the, you know, the monetary aspect of silver, but also the industrial aspect and the uses that we see coming in this push that governments around the world are towards green technologies, and silver especially. I mean, obviously our project's 50-50, so I like both the gold and silver. I think we have exposure to both at Silver Viper, but that side of silver where you've got, you know, I think the ratio coming out of the ground right now is about 8-to-1 gold to silver, and yet you've got this quite different ratio in price. Silver, especially primary silver deposits, are very hard to come by, and typically they're these low sulfidation epithermal systems, and those are harder and harder to find. Though, you know, the ones near surface for the most part have been found. You know, there's a few that have been found over the last couple of years. Ours is close to surface where we are, but they're harder and harder to find. Where gold, you've got lots of deposits, and as gold prices move up, you can replace those oftentimes with lower grade deposits that are sitting there easily accessible. That's not really the case with silver and the projects that haven't already been developed around the world. Silver's harder and harder to find, and because of that, I think you're going to see silver prices, as the demand goes up, that silver price is going to greatly outperform the gold price, even though I think gold's going to do quite well here over the next 7-8 years. I think silver is really going to perform well, and you know, right now at $26, we're only at half or just over half of what the last high was of last cycle, and you've had gold trading, you know, already above that last high. So just in itself on those ratios, you know, that's more of the monetary side. I think you're going to see silver really outperform gold moving forward, and I don't think it's going to take that much time for silver to get right back to the high from the last cycle. And then I think, you know, as we've seen, you know, we always talk about Keith Neumeyer, some of the other experts out there, some of the other CEOs, and they've obviously thrown around some pretty astronomical numbers of how high they think silver will go. This is a very exciting time, and I think we're right at the start of, you know, one of these shouldn't say unprecedented because they've happened before, but it's an opportunity that a lot of investors haven't seen before, and getting involved in silver especially, they're going to get a lot of exposure and do quite well over the next 7-8 years of this bull run.
Well, I certainly think so. And Steve, it was interesting. You kind of preempted my next slide I was going to pull up here. I'm quite happy and proud to say that you're one of the smartest people I've met in the silver industry. So perhaps you can explain this one to me. Here we see the 1980 prices. Again, this is 2 years old, the 2018 prices, so we could update that. But I mean, gold now at almost $1,900, over 100%. Rhodium, Steve, have you found any rhodium lying around anywhere in those rocks lately? You know, it's up to over 14,000 right now.
It's great, but rhodium's a weird one because I've always been, and I'm not a PGM expert. I almost went into PGM, but one of our geologists scared the hell out of me with just that there's not a lot of buyers on the major side, so you don't get the competition that you get in gold and silver when you're selling a PGM asset. But from my understanding of rhodium, it's got this price that runs like crazy, but even if people have it, most of the time they're not allowed to sell it, or they're not able to sell it. So I don't understand the phenomenon of rhodium and the price running exponentially the way it has, but I have heard even if you have it, oftentimes you can't sell it. So the focus on those projects tends to be on now palladium, that's the to me the stranger, and I guess it's from a industrial standpoint, but how palladium and platinum have flip-flopped of, you know, who's the leader in the PGM spectrum of what you're looking for. And again, it comes down to the industrial uses. But, you know, I remember growing up with platinum always being like this thing that was greater than gold in the jewelry world. And if you could afford platinum jewelry, man, you were way ahead of anyone who had the regular old gold jewelry. But it's, you know, gold's past it, and now palladium obviously is really past it. And you've got, so that's a bit of a strange one. But PGM's tough. PGM is a weird sector in that you've got, you know, 2 or 3 major players that will buy out those assets, and the quantity is even that much less than what you see in gold as far as trying to find palladium and platinum and how much is mined in a year. So I mean, yeah, rhodium. I wish there was a way to find rhodium and actually be able to sell it, but there's not a lot of uses for it. It's a weird one. It's always kind of an enigma.
Yeah, and then toss in when you mentioned how there's 2 or 3 major players in platinum and palladium. Toss in when 2 or 3 of those major players are fined for spoofing the markets, not a couple of times, but thousands of times. And I might add also front running the options so they could screw their customers on those as well. And perhaps another time we'll dig into that more. But even despite that, you have palladium up about 8x at the, it's like $2,300 now. Platinum, I think, is lagging far behind, although still up about 50% if you mark it at $1,000 there. Yet here's silver today at $26. I mean, all these at least are up like 50% or more, if not, 10 or 15x. Why do you think silver is still half of its 1980 high?
We always wonder that every day, of the year. I mean, you look at it and just say, how long do we have the silver producers? And I mean, Keith, I think, at First Majestic was one of the best ones that sat there and was trying to hold silver in inventory and was trying to refuse to sell it. But, you've got these silver producers that are operating and losing money, especially at $15 silver. I mean, I think for a while there, the average cost across the producers was around $20 silver. So they finally entered a market now where they can make some money. But as, it kind of defies the laws of supply and demand when you've got people that are producing something and losing money doing it, and yet the supply is going down and the demand is going up. It's not how things are supposed to work. And we can go down the rabbit hole of gold and silver price manipulation and what the big banks and the governments of the world want to do on that front, and why, I guess another comparison, and I think something that people are more probably ignoring a bit, but if you compare, say, Bitcoin to gold and silver, and you wonder why Bitcoin is running the way it is, it's because the banks don't have the paper gold and the paper silver market created for Bitcoins. They don't have access to manipulate that price. Bitcoin's got this finite amount that ultimately only be 21 million coins, supposedly. But you've got no banks, and they have no way of stopping it from running. They don't have their paper market like they do, where they've lent out, on the metals, or if it's gold, they've lent it out, the same amounts of gold out 100 times in printed paper, the ETFs and everything else that have been created. So silver's going to have its day. Gold will have its day. Silver always outperforms gold on the way up, and it's coming. And I don't think it's going to take much. I think maybe the $30 level is a big kind of hurdle that once it pushes through that, you're going to get some more of those generalist investors starting to pour back in and getting excited about silver. We saw, I guess, a brief blip when we went from $12 or $15 silver up to where we are now. There was a lot of excitement there for a few months over silver, and it's kind of fallen off a bit. And I think it'll pick back up again, but it may take it jumping up to that $30 level, which we're, seem to be quickly moving towards. But there's just right now, like I said, supply and demand laws aren't working with the cost. That at some point that's all going to balance itself out. It has to.
Yeah, I mean, although perhaps a question people ask is, what's the risk to owning silver? And Steve, I got a few pulled up here, and perhaps we could just think in terms of probabilities, and you tell me. I mean, I guess there are risks. To me, it would be, and you let me know if you see any of these happening soon. The U.S. could pay down the debt, which, keep in mind, with that extra 900 billion pop they're processing through right now, that's really 28.4. So that doesn't. Are we going to assume that's not too likely?
That's not happening.
By the way, before we leave this one, the dollar to silver ratio, Steve, you might want to bookmark this because it goes up quick. Last week I commented it was 4,444. So this is money supply over silver production in 2020. Oh. So if you find one of those ounces, maybe it's worth a little more than $25. I don't know. I guess this was an interesting one I mentioned the other night, but Would you say that if when the government's 28.5 trillion in debt and is now just directly monetizing it, that spending $10 million for gender programs in Pakistan is not perhaps a sign that this is headed in the right direction?
I agree. I remember reading that headline as part of that, that monetary bill that was coming for the year. That,
yeah. Okay. So then we pull up the Fed's balance sheet, which here says about 7.3 trillion. But Steve, I can't figure out where the government's going to come up with 900 billion outside of the Fed's balance sheet. So it looks like this is going to go over 8 before it goes under 7, right?
Yep.
So maybe investors have to look forward to a 0. That's not 93% yield on the Treasury. That's 0. So less than 1%. But Steve, I remember Jerome Powell earlier saying this year that 2% inflation, they were actually thinking about boosting it up to 4%, even with their broken calculator numbers. So if there's a 4% inflation rate and a 1% yield, that's not a big incentive for treasuries.
Correct.
And would you, I'm sure you've heard that they refer to the U.S. Treasury as the safe haven. What would you tell an investor about that? I mean, is accurate, or?
I think it's accurate that the world thinks it's the safe haven. I don't think it's accurate that that's not where, the same as people think blue chips are a safe haven. They think the US dollar is a safe haven. They think treasury bills are the safe haven. In general, people look around and think somehow because the US is the world currency that it's the safest over all these other currencies that are failing. But I think that's the problem here. And I think that's where at some point there's going to be a change moving forward, that we go back to some form of a currency, whether it's a digital currency or a blending of other currencies, but you got to have something that's backed by gold and silver and, some real assets behind a currency, that you can't just print unlimited amounts. And, the US, it's scary. And I sit across the border to the north looking back down at it, but it's, on a history level, it's insane how quick the US is, going to go from a world power to not being a world power relative to other empires and governments and that have done in their time as the world power. But, and sometimes, I think with the silver crowd that resonates, but, that's not a popular view to most Americans to think about that. And, there's all sorts of different aspects to it, but you look at the US and Canada at some level as well, but we, a lot of our country lives outside of their earning means. We've got this idea that we've all constantly got to have, bigger, nicer, better things. And the US, and countries that were printing money, I guess, to help support that. But, we just keep moving further and further and further into debt as a society. And it's all going to collapse at some point, and it's scary. And we don't really want to live in that world after it collapses in our countries, when you start to see, hyperinflation on your currency. And, you've seen it in Argentina and you've seen it in, Africa. And it's not a fun time when you got to show up to the store with a bag of money if you got your physical currency to buy a loaf of bread. And you start printing, bigger and bigger bills. And I remember how big the bills got in South Africa on their thing, but they had, trillion rand bills that were being printed so you didn't have to carry 10 bags of money into the store to buy the loaf of bread.
What could go wrong with that?
I've heard some guys in the industry that were working in South Africa and other parts when that was happening, and they were petrified of any of their business transactions because, you'd lock into a contract or try to get something to buy fuel or something for your rigs and that, and what was going on site. And by that afternoon, it was, the hyperinflation had kicked in, and you were just like, what do I do? Like, it's costing me that much more now to do it. And it's a problem, and it's scary. And the US and Canada haven't had to live through anything like that yet. But I think it's coming. If we don't somehow magically, like you say, erase the debt in the US, which there's no real avenue for that. And it's not popular for, a government to step in and be the ones who are going to play hardball and affect people's livelihoods. People like the government that's giving them the handouts, and like the government that's going to, continue to keep their way of life similar to what it is, but it's something that should have changed a long time ago, that people should have been living more within their means. They shouldn't be taking out second, third, fourth mortgages to get nicer things and just creating this, house of cards that's ready to fall.
Yeah, I mean, I would think that's not ideal. And it's interesting, while you were mentioning the what happens when the currency is inflated, I was attempting to find a longer term chart of, I mean, it's like you were describing the Fed's balance sheet. We'll pull up this one. Keep in mind, this is like, I wish you could get it all the way back to 1913 so it would look, even more dramatic than this. But I mean, here's from the beginning of the Fed 100 years ago to 2008. You had 900 billion. And I mean, then it's going exponential. Keep in mind, again, like we mentioned earlier, this is really up here somewhere. So it's incredible. And then you go back to the treasury market, where I would assert that the main reason that people continue to buy treasuries is not because they actually believe it's the safe haven, but because they believe the Fed is going to keep buying them. And if the only reason you're going to buy something is because it's some other con artist is going to push the price higher, does that fit to the T, the description of a Ponzi scheme?
Yeah, absolutely.
And interestingly, Steve, you see over here, get the top 3 stocks revolutionizing the electric car industry. And I'm guessing all 3 of these companies are going to be heavy silver users, probably. What do you think? What do you
think that's a
hydrogen powered stocks to your vehicle? I mean, everything going green is seemingly requiring silver. Again, here's explosion of the debt. So I guess last question on the markets here, Steve. We could look to the stock market, which has an interesting chart. We'll pull up the Dow Jones here, where again, we had the shutdown and everything. Although it's interesting, you look at the longer term chart. There we go, longer term chart. And it's like Corona was just like a little blip in there. What do you think happened between when the market got hammered after Corona and now when it's back at all-time highs again? Was that due to a great era of productivity, or what do you think?
I think it was I think it was, again, we go back to printing of money. It was the Fed, the stimulus, and what they started doing of, like you say, the physically increasing their balance sheet and that, influx into the economy, and it freed up, and you combine that with lowering interest rates across the board to, basically record low interest rates almost around the world. And that frees up the wealthy to start pouring money into investments and loan and borrow at next to no interest, with the assumption that, the Dow, because of that chart, is always going to go up and they're going to make more on their investments than what that interest rate is that they've loaned it on. But again, we talk about a house of cards and things don't all go up. And what happens to all these people that have been borrowing or, over extending themselves in these investments, and you get a spike down like we saw at the pandemic, or throughout history, where we've had these recessions or depressions that can kick in, and that market, yes, in the grand scheme of things, will keep going up. But if you hurt for a few years, then you sink and bankrupt people, and then you're in for a lot of problems. But I think that's what happened from coronavirus to now, is just stimulus in the economy. And you've got, again, governments that don't want to look bad, especially when you were moving into an election this year. You were trying to do everything you could to convince Americans that the economy is great and everything, Lego movie, everything is awesome. When it's not. It's, yes, it's awesome when you're giving people free handouts, and we'll see if Trump gets his way and gets, a $2,000 check to all, Americans here on this stimulus instead of the $600 check. But that stimulates the economy, but that's not sustainable. That's actually horrible. And that's where you've got, there's Republican senators that are pushing back against any sort of free check, because they said that, like you said, the balance sheet is growing so rapidly. And this is just the first stimulus package. This isn't going to be, enough. We're going to go through 2021 and we'll see how many of these we have, but there's definitely going to be more, and they're going to get bigger and bigger as they come along. I remember hearing that the stimulus package, if Trump had won, was supposed to be about $5 trillion, coming out of that election. So, and I think the Democrats want to print more than he does and want to do, more free handouts. They want to waive student debt for university loans, and then free healthcare, which if you look at Canada and everyone says we have free healthcare, it's not free at all. So, and there's also problems with our system when it comes to healthcare. But, if they want to give away that all for free, you're either going to tax people a lot more, and that's not normally a very popular thing for the masses, or you're going to keep printing and stimulating and just trying to create wealth out of nothing.
Yeah, and it's funny, as you were mentioning that, I see in the bottom underneath my Zoom window, you're the best college student course for December 2020. So let's pile on a little more. And it really does seem like the government approach is just run up the credit card before you're going to default, which, again, in keeping with this year's, my 2021 theme is why complain about it? Just, what it's going to be, plan around it. So Steve, in summation, what would you tell people as we're closing out 2020 and they're wondering how to position for the next year? And it is not legal financial advice, but just parting thoughts on, we see the stock market at all-time highs, and at least, if anybody likes the US-centric buy high, sell low ideology, perhaps you can tune out now. But for people who think that's a little odd, we have stock market all-time highs, bond market all-time highs, Fed balance sheet all-time highs, debt load somewhere in here, all-time highs, and silver 50% of its 1980 high. What would you say to folks on that one?
I think it's, it's weird. This thing that's happened in the financial world is all these, in Canada especially, and I think the US is the same. But all of our big banks, all these guys that used to be brokers that, advised you and told you to invest in, expiration plays and these things they've all gone, their compliances have stepped in, governments have stepped in, and it's hard to even buy stocks like ours, in a lot of these places. But you got to sign your life away that you're not insane investing in, something. They all want everyone to be wealth managed and to get in these neat, tidy things that can make, supposedly you're going to bring back 5% a year, 10% if it's a great year or something. And they've been pushing, and all of those people have been pushing and pushing stuff into that US stock market and the Dow and the S&P. And I think you got to go back to what was always the historic truth, and you need to have a portion of your portfolio is in the physical metals. It's easier to store if you're a bigger investor. I'm talking about like the Buffetts and that of the world. It's obviously not as appealing to them to own physical silver, because to protect, the percentage of their portfolio that you protect, it isn't functional for the amount of space they would need in silver. But, you need silver, you need gold. I think, a smaller retail investor, silver is great because they can buy it. They have the space to store a large amount of silver and buy it at a lot cheaper. And I think you've got bigger gains coming in silver on that front. But I think you should still diversify and have both gold and silver in physical as part of your portfolio. And then, if you really, which people that are tuning in and listening to this probably are, if you want greater exposure to silver and gold and decide on where your risk profile sits, you work your way down from the producers, which typically will outperform the metals prices on the way up in one of these bull markets. Their share prices will outperform. And if you're focused on the producers, you're looking, for, obviously they're more de-risked, they're in production, you can see their financials, but your gain potential there is going to be, say, 1x is 1x would be fantastic on a Agnico Eagle or a First Majestic this year. If you have that risk profile, and again, like you said, it's up to people to break down their ratio on their own, but a portion of that portfolio should be in higher risk stuff and move down. And if you're interested in coming down to the level where there are 10, 20 baggers potential, and those are not everyone.
Yes, I want that level. I am interested. You had me at hello.
Yeah. That's exciting. And the guys in our industry that have invested for decades now, that have really got it, understand that you only need one out of, if one's a 10 bagger, then the other 9 can go to 0, and you've broken even at least on that front. If you have 2 out of 10, then you've made a whole lot of money. And 10 is, probably conservative if you're going down the totem pole. Obviously, there's lots of times where if you get involved early with companies or at the beginning of a cycle, you get a lot more than a 10 bagger. So like I said, in that, focus on good management teams and have a track record. But pick your 10 best companies from all these different talks and different people that are investing, and a portion of your portfolio, if you have that risk tolerance, invest in those juniors, tuck it away, forget about it. Don't try and day trade the junior stocks. These are long hold investments. The guys will invest in our space. They place their bets. They continue to support those bets, and we'll follow groups for, if it takes 10 years, if it takes 20 years, they've got their investment in the companies that they believe in. And, those are the guys that have made money in this sector. It's not one to come in and try and pinpoint tops and bottoms and day trade on, charts that look great or don't look great. And the junior space is something that you're looking to long hold it, but it's up to people to pick, based on what their tolerance is for risk, because our industry and the exploration side is, it still comes down to what comes out of that drill bit, and that can take a long time to find something. You can get lucky and you can find something quick. I certainly think we're off to all 3 of our companies have various exposures and levels to gold and silver, and we're a group that's done it before. We've sold something in Mexico to, was actually, we talked about Keith. Keith was in the bidding war on our last big success in Mexico with Orco Silver and the La Preciosa deposit, and he ended up losing out to Coeur Mining in the bidding war. But that was a project, we put the first drill hole into and grew it to 270 million ounces of silver in Durango, Mexico, sold in 2012 for 375 million. I would like to have that again today. I think it would be worth a lot more under these prices and where silver's going. But that's what we do. And those, that's a company that started as under $1 million market cap company and sold for, you want to go X's if you got involved at the very, very beginning in the start of Orco Silver. At under $1 million, you sell for 375 million US. It's a good return.
Yeah, well, I think you're positioned quite well, and it's been fun following along. And Steve, perhaps just in wrapping up, can you give folks an idea? I mean, you've talked about the profile, but just any bullets you want to highlight and where they can find more information, how they can get questions answered.
Yeah, I mean, our group is the Belcara Management Group. That's a private group. We have 3 public companies under our management. I'm the CEO of one of the companies, Silver Viper Minerals, which is certainly what takes up the majority of my time and where my efforts are. That symbol is VIPR on the TSXV and on the OTCQB VIPRF. But also in the Belcara group, we've got a silver company called Orex Minerals that is located in Durango, Mexico. It's got a joint venture with Fresnillo, the largest silver mining company in the world, and also a joint venture with Pan American Silver, who will be the largest silver mining company in the world when their next mine comes online. And then on the gold side, we've got Barcele Minerals, ticker symbol BME. And that's a joint venture with Agnico Eagle in Sweden, which is a great, that's our most advanced deposit. That one's got 2.5 million ounces of gold and a very strict resource. But VIPR is where I'm focused on. You've got exposure to gold and silver here. Our assays are about 55% gold, 45% silver. We've had a pullback like a lot of our peers, but it's created an opportunity right now to really pick away at a much cheaper level than we were, say, 4 months ago, I guess now. And when we were up at an all-time high of 85 cents. We've got a maiden resource coming out at some point in the first quarter of next year, which I think is a major catalyst for the company, and we'll have ongoing news flow as we continue to drill. So very exciting, well-positioned company, and it's a newer company. It did an IPO in 2017, so it's got a low share count. We've only got 80 million shares right now. We got cash in the bank. So yeah, everyone, if you're interested, reach out to, you can go through the websites, the info at Silver Viper Minerals, all those emails come to me and are as well, or you can get me at steve.cope@belcaragroup.com. But yeah, we'll get it. I'll see anyone's emails or phone calls that come in. We're not working out of the office right now with COVID, but our secretary has all those calls forwarded to her, and I get messages if people want to chat on the phone, and I'm always available to do that.
Well, and we'll have the link in the description field below. So Steve, thank you as always for joining me. I think it's going to be an exciting year. And I'm excited to follow your success and progress, and we'll have to do this again soon.
Appreciate it, Chris. Anytime.